But your first pick is a stock that's actually up about 21% over the last year, and that's Discovery. Why don't you talk about why you like it?
Yeah, well, Discovery was a stock that did get trounced coming off their Scripps deal looking back to 17. So it's something that did get beat up off a lot of the circumstances. That was Netflix taking over the entertainment and content world, them being a buyer of HGTV and the Food Network and Travel Channel. And those were all big contentious fears. John Malone on your program with David, it spoke numerous times about what he thought the business looked like as well as what he thought the price was, and was a buyer of that stock. And you wake up, and like you said, it went from 23 to 30 in the last year and then came back, but it's still up nicely, relative to where it was, a little over 15 months ago. So it's when I say 10 years, Becky, think about it like this. Buffett closed his partnership in 1969 because of the terrible circumstances that he saw forward. It wasn't until 3 years later that we hit the Nifty 50, but he was right in that index returns were, call it anywhere from 3 to 5%, depending on what year you looked 10 years forward from the late 60s there. Consumer confidence was high, just like now, as well as households owned a lot of stocks, and those are very analogous circumstances. So taking risks like Discovery with John Malone as a shareholder, great content. Every man, woman, and child is addicted to watching other people's beautiful houses in their content. It's very cheap content. That looks a lot more attractive the next 10 years.
You also like American Express. Bank of America recently cut its target on the stock, saying it's had a nice run. What is it that you see that makes you really like American Express?
Yeah, it's a great question. So, we got involved with American Express off the Costco disagreement a few years ago here now. But looking forward, here's some things to think about. From 1996 to today, we grew the number of baby boomers, or over 55-year-olds in society, and we're roughly peaking that now. And that was a composition of people that were making a lot of money and saving a lot of money because they were preparing for retirement. The problem is that wasn't good for economic growth because the savers weren't benefiting society. The three largest cohorts over the next couple of years are going to be 25 to 29, 30 to 34, and 35 to 39, which are people that are making money, they have needs in their life tied to their family, and they're spending it like drunken sailors on leave because their kids are just so darn cute and fun, and that's just part of life. And that's what's going to go on. And that's a great thing for the economy, but particularly think about it like this. If you're American Express, if more activity is going on, you're just collecting a lot more of that than Visa or MasterCard are, as an example.
Cole, there have been plenty of businesses that have been disrupted by Amazon as it moves into more and more different lines of business. Walgreens is one of those businesses that people think, okay, what happens if Amazon actually gets into pharmaceuticals? You're not concerned. You like Walgreens Boots Alliance as one of your top picks, too.
Yeah. Very interestingly, they own 30% of AmerisourceBergen. I think I'd put in my notes for you guys. And AmerisourceBergen is actually the distributor to PillPack. So this idea that Amazon is just so autonomous and they kind of omnisciently think and their Jedi mind tricks take over. No, they're very much tied into the integrated business, which is pharmaceuticals and drug distribution and the regulatory environment that's laid out. So a lot of this comes down to price, Becky. Why did Buffett want to walk away from picking stocks for his partnership investors in 1969? It was price. He didn't tell them to not own stocks. He sent them to Ruane at the Sequoia Fund, and he instead just chose to own one stock. If there's any prescription for today with names like Discovery or American Express or Walgreens, it is concentration, just like Buffett going to own only Berkshire in '69.